all the documents carefully before investing.
Welcome back to Halftime Report on CNBC-TV18. Well, the market is down, but there are plenty of stocks that are bucking the trend. The cement space is actually doing quite well this afternoon. Ambuja Cement is up about 2.5%. You have a couple of others in the broader markets in the cement space that are also doing pretty well this morning. And, some of these amine stocks, Balaji Amines, for example, has had a smooth run this month. So Balaji Amines is up almost 15% this month. ACC from the cement space is doing pretty well, alkyl amines too. So there are a couple of pockets that are really standing out this afternoon, despite the overall market being under pressure. And now the Bank Nifty is also cutting its losses quite a bit, actually. The Bank Nifty is now in the green and is up almost about 16, 17 odd points. Big help coming in from ICICI Bank. Is doing all the heavy lifting this afternoon on the back of this really strong numbers, and Axis Bank as well. Ahead of its earnings this week, Axis Bank is up almost about half odd percent. So pretty good day for some of the large cap banking names, at least bucking the falling trend.
That's correct. You know, they're just far and few in between as far as the gainers are concerned, because Sonia, in the mid-cap end of things, one particular pack is not doing well, and that's the consumer discretionary pack. Indian Hotels is actually now down to the low point of trade. Maybe is there a worry about rising COVID cases, etc., coming back onto some of these counters? Because if you take a look at the clutch of stocks which are declining were the ones that actually rallied on hopes of unlock as well. Delta Corp, for instance, is at the low point of trade. Jubilant Foodworks is down almost 6.5 odd percent. And then you have Trent too. Trent is, of course, benefiting from, or was supposed to benefit from, people returning to offices or people returning to go out, etc. That stock too has moved to the low point of trade. So the cycle of fear begins once again with rising COVID cases. Let's see where that goes from here.
You know, interestingly, you're talking about COVID cases, and IOL Chemicals is increasing its paracetamol capacity. I was just glancing through all of their old transcripts in terms of the, calls, and they mentioned that the reason why they all of a sudden saw a surge in paracetamol demand was also because people started using paracetamol extensively for COVID. Yeah. So maybe besides the fact that they're expanding capacity, it's also because paracetamol is preferred over ibuprofen when it comes to COVID-19. So maybe there's this hope that there would be demand.
We don't hope for any such thing, that there'll be more demand, right? I mean, we don't want to hear COVID yet again. But yes, it is a rising concern now, especially in key metros. But Indonesia's move to halt exports of palm oil has pushed up palm oil prices by almost 8 to 9%. FMCG stocks like HUL, Britannia, Godrej Consumer and Marico have been under pressure because of higher input costs. The industry organizations say that Indonesian ban may be temporary. Mayank Shah, the senior category head at Parle Products, joins us now to talk about that. Mr. Shah, thanks so much for joining us. With the way edible oil prices are soaring, first, if you can tell us what is the impact that it will have on a company like yours, as well as what the industry is doing to combat these higher prices.
Since palm oil is one of the critical inputs going into foods, I think that's surely going to have, impact or bearing on the cost. One. Secondly, I think even before the ban, I think, the prices were at record high. And the ban is only going to add to our challenges. So that way, I think it's going to be a critical thing, a critical challenge ahead of almost all food players. And if you look at the consumption of palm oil, it's not just restricted to foods. I think even, non-foods player, other FMCG players, palm happens to be one of the critical inputs. So I think it's going to be a challenge, for the broader FMCG sector going forward if this ban persists.
Point completely, Mayank, on the inflation that we've seen in palm and palm oil derivative prices over the last 1 year or so, over 50% for PFAD as well as palm. But could you tell us what exactly is the current palm oil price? Have you seen any change on account of this Indonesian announcement? What's the kind of inventory that you guys typically sit on with regards to palm oil? Because a lot of the experts that joined us on the channel this morning don't believe that this situation could last beyond 3 to 4 weeks. Indonesia at some point will have to open the exports up.
Yeah, so that's one of the key exports from Indonesia. So I don't think that they can continue with the ban. I think this is more to take care of the local situation out there where there is unrest because of the increasing edible oil prices in Indonesia. So this might be probably a move to pacify the local public out there. There is a widespread protest against government on the increasing edible oil prices in Indonesia, and that too when it happens to be one of the key exporters of the major exporter of palm oil. So I think primarily to take care of the unrest, local unrest, I think the government has taken up this initiative, and I don't think like most other experts that this is sustainable given their dependence on the exports of palm oil.
And what inventory do you typically sit on?
Normally, palm oil, inventory is not more than few days. The reason being, once you refine CPO, which is crude palm oil, there is a limited shelf life within which you are supposed to use the palm oil. So, especially when you are transporting it from a place to another, or even when you are storing it, it's typically stored in silos, or there are tanks which are made for it. It deteriorates very fast. So you have limited shelf life. The perishability is high. You have to use it within that. Typically, it's not the stocks which you sit on. It's primarily the forward contracts that you have, which makes the difference in terms of your buying cost. So most companies, they use forward contracts to hedge their risk, specifically risk like this. So it's used more as a hedging tool and not as a speculative tool. So when you talk about really hedging your risk, then typically you will have about 30, 40, 50%, depending on if the commodity, if the traders are bullish on the commodity, then towards higher side you will have probably 40, 50% of your next quarter requirement being contracted. If traders are bullish, and if you're expecting bearish, if you are expecting a bearish trend of a particular commodity, then you will have probably 10 or 20% contracts, or 10 or 20% of your requirements contracts worth that much. So you would be better off if you have, let's say, 30-40% plus of your requirement contracted.
Mayank, I just wanted to come in there and ask you then, what exactly are you doing for your company per se right now? Considering that the inventory levels are only, say, for a few days, are you looking to probably source palm oil, one, from another destination, and two, whether you look to replace palm oil as a whole?
See, Malaysia being other major producer of palm oil, was one alternate. However, the issue with Malaysia is that post-COVID, I think, there are labor problems. Also, there are environmental, groups in Malaysia who are protesting against deforestation as a result of, CPO being taken out from there. There's also, wildlife experts and wildlife conservation activists who are against, sourcing palm oil from Malaysia, because it also happens to be a habitat of orangutan. So they have their own set of challenges. So typically, a company or rather, industry would expect, to fall back on another country which can be a major supplier of crude oil. And in this case, Malaysia, I think it would not be right to keep, huge expectations from Malaysia given their own domestic problems, especially the labor one. So I think they are facing a labor issue post-COVID.
Okay, all right. We'll leave it at that. Mayank, thanks a lot for joining us and giving us an update on the impact that the palm oil export ban would have on prices and the escalation of costs for companies like yours. Let's do one thing. Let's slip into a quick break. We will put the focus on auto stocks. We'll decode why auto stocks have been gaining trade in 2022 and how are the valuations stacked up. Stay tuned.
Unmatched